of the biggest questions that I've wanted to ask. Trupti spent a lot of time talking about preventing fraud at Uber Eats and keeping the money where it is. Who else wants to share more about fraud in your subsector of financial services and what you're doing to be able to combat that?
I mean, I have to say, it's not my department, but we have to make a little advertising. So we bought Brighterion, which is an AI fraud company based basically 90% data scientists. So we use them and new data and some of the other products that we have to sort of combat what the person before was talking about, sort of how can we combat fraud, how can we predict and anticipate fraud and not deal with it when it happened, because then you have to deal with chargebacks and all this stuff you don't want to deal with. So we have all these tools and we try to implement it into our digital payments on all the products that we have, so it's like a suite and works together.
Got it. Mexico has the world's highest chargeback rate.
Oh, really?
Yes. Yeah, so a lot of work to be done there. People will just like buy a vacation and say, oh, sorry, that wasn't me.
Right. And South America in general, because they don't have a lot of authentication going on there. So.
Yeah. Anybody else? Fraud? No? Yes? No? No? No fraud and remittances?
Remittance, because we covered by the regulator, right? So we must have the report every month, and we have the ML, we have to do the KYC definitely, so we have to submit everything into the government. Because my business model is B2B, so it's much easier, because before we can connect with them, we must have something like approval, pre-approval by the government, but that the other party is as well remittance license too. So it's not like a company without remittance license. So.
Got it. Okay. Okay, first audience question. Stick that hand up and the mic. I see one over here.
Yeah. Hi. I'm just curious. In Indonesia, what's the general mechanism behind people saving, whether that be small amounts of money or larger sums of money, but retail savings in the market there? Do people save deposits as individuals, and if so, how are savings kind of participated in?
Are you talking about the bankable people?
Yeah, and unbankables, do they use sort of communities and things like that to save collaboratively?
All right. There is two types of client in Indonesia, yeah, the customer. So basically the customer who bankable and the non-bankable. The bankable one is they usually individual. Definitely, they put it with the bank, or of course the top wealthy will be put it with the trust or with the private banking. But for we're talking about the unbankable people, they put it, they pull together in the like coop, for example. Most of them they put it in the coop and then they just deposit the money with the cooperative. And then when anytime they need it, they will be taken out from the cooperative, and the cooperative will be put the money with the escrow in the bank. So this is what they done.
Cool. Great, thank you. Okay, where are the funding gaps? We have people on both sides of the table here, right? You're building something, you're growing something, you have cool ideas. Where are these parts in the market where you're ready for the next notch of funding maybe, but the funders aren't ready to give it to you, and what do you think we can do about that?
Well, I'd say what I'm focused on is figuring out how do we bring more institutional capital into the space where they can invest in and access high-quality startups, because that's really where most of the growth and return is going to be, in my opinion. And public market returns are going to be very mediocre for the foreseeable future. Most people are thinking anywhere in the range of, call it 3 to 6% for a blended portfolio of stocks and bonds. And that's just not going to meet the hurdle rates that a lot of pensions and endowments and other institutional investors have. So their institutional investors are going to have to look for other asset classes to invest in. And really, it's pretty obvious. We all know where the opportunity is. It's in investing in innovation and technology that can be scaled faster than ever before. So I think that this idea of how do we bring in more institutional capital over the next few years is kind of the critical Gordian knot that I'm trying to untie along with other folks. Because in the grand scheme of things, the amount of VC capital out there is like a drop in the bucket. Like it's insignificant compared to what the large institutions manage. So if we can open that spigot, it's going to create a lot of growth.
So, Meysam, you have a lot of capital. In fact, as you were up
My
there...
company does.
Yes. And as you're sitting up there talking about all these beautiful partnerships, I thought, wow, that sounds like an amazing job. Like, the biggest companies in the world come to me and say, let's build something, and I can just, throw 300 developers on it, and unlimited resources. Eye rolling. Okay, so what's really like?
Reality check. I think sort of depends. If you look into the issuer side of things, so that's where MasterCard's core business is today, there is a lot of money flowing back and forth between each other for marketing and other things. On our side, it's more of the digital product development side. So yes, if there is a large enough project, and I mentioned the Apple, Goldman Sachs, and MasterCard partnership, then there are obviously engineering resources will be made available, marketing will be made available. We usually go in my team for initial proof of concept. So for example, that hotel example that I give, we're going to put money into it and resources to make this sort of example and this proof of concept work. And once it works, then we sort of give it over to the sales team so they can scale it. They got the real money. So we are a cost center at MasterCard. We don't drive revenue. We just come up with new fancy digital products. But then the sales teams who actually drive the money, they would have the big budgets and then sort of scale that. Our job is to create first in place things, make it from a product perspective viable, make it scalable, and once that is done, then we basically pass it over.
Got it. Great. One of the things about having lending fintechs is that you have to get two buckets of money. One is equity, right? And that's how you can pay your staff, rent your office, computers, travel, all that good stuff. But then you also need debt capital to actually lend and do the transactions. And that money sits in a special trust, and it can only be used to lend directly to your users, right? You can't pay salaries with it. And one of the challenges that I've learned is that in each market, you really ideally get this locally, right? Because if you're getting it from the US in dollar denominations and then lending it out in pesos or rupee, you're going to have a problem with Forex. I don't know, Tala, if you have any remarks on that.
Sure. So prior to answering the immediate question, so Tala actually, when we first started, was meant to just be a scoring product that other banks could then use. I think initially we ran into some challenges there convincing the banks to lend based on this alternative data. So we did then sort of pivot. We still do the scoring, but we do lend, from our balance sheet. And with that does come what Alex mentioned around, needing to have the money to lend, especially when you're growing. So what I've noticed after going through at least one round of equity financing and while also seeing us raise debt is that the way you raise that and what the investors are looking for is very different. So on the equity side, they're looking for very high growth potential, knowing that there's decent likelihood that the idea is going to fail. Whereas on the debt side, they're looking for much more stability. So they want to see demonstrated, strong performance over a long time horizon. They're not looking to invest in things that are going to be changing very drastically, or at least if they're going to change, you have to first prove it with data that it's a stable idea. So agree with the point on ideally if we can get funds in country, because that will mitigate some of the Forex risk. But I think the main remark I did want to make is just how we raise those types of funds is very different, and will continue to be a challenge and an interesting one as we do grow.
Great. Trupti, everybody knows you just went to an IPO, right? Different funding structure. Anything you can share about how things are changing? I've heard Uber Eats described as a startup within a startup. I don't know if the source of your funding is starting to change for the good or the complicated or the bad, how things are operating on the day-to-day.
Yeah, it's interesting. It is a startup within a startup. That's fair comparison or like analogy, but that's what makes it interesting. Funding is tight though. I mean, given our competitors, we brought in a lot of awareness. You saw the growth curve, right? That brought in a lot of investors' attention. Oh, food delivery is a huge marketplace. And as you can see, it's all in the news. Our competitors are getting a lot of funding. Some of them from the same places as well. So competition is tight. And they're putting a lot of resources in these promos and stuff, and then now we're a public company. We have to care about our balance sheet a lot more. We are, answerable to the market and the street and our shareholders. So if anything, you would think that it's more liquid and the money is flowing, but I think I would say it's the opposite. So we are gonna innovate, and we are more focused on what our core competencies are and compete on that. We are a technology company, and so that's what we are going to compete on. And then where my world comes into picture is, so fraudsters are out there to get everybody, right? That's their core business. And you would think this is just alone someone sitting in their basement. No, these are institutions, like they have employers, and they employ people to just figure out, it's like a hackathon going on 24/7. So where technology and my core space comes into picture is you wanna not be that slowest runner when a cheetah or a tiger is coming after you. So they are out there anyways, and so if you're better than your slowest runner or your competition, then that much more is your bottom line bigger, if that helps.
Totally. Mila, I don't know if you have a perspective on access to capital in Indonesia, having come from institutional side and now working on building new businesses. Is it harder? Is it easier? How does it compare to the region and to the world?
You mean if the access the capital itself in Indonesia?
Yep.
Actually, plenty for the wealthy, we're talking about the individual wealthy, ultra high net worth. They're doing a lot of investment, but most of them, they through the institutional, like banking or private equity, or they have their own company as well, usually to doing this kind of lending. But the access is still huge, but most of them, they did it more in the country itself, but also in overseas. But because currently the market is booming in Indonesia for the economy, so most of the people invest a lot in the country itself. So I think the competition is, in fact, a lot of from the China especially, is coming in a lot with a lot of investment to Indonesia, and they're looking a lot at every opportunity that they can get, especially in the fintech, e-commerce, and infrastructure.
Great. So I think we can kind of conclude here with this question that you can go on crunchbase.com. You can look at how much we've raised, right? You can see who the investors are, and we're trying to be better, faster, cheaper, and promote financial inclusion. But capital is tight. You read these headlines, but it's still tight, and it's something you're always fundraising, right? I saw a hand. Questions? There's several hands. Whoever has the microphone, they'll bring you the microphone. It's coming up the aisle. You can start, and then we'll go. Yeah.
Okay.
Just try talking.
Okay, there we go. Hello, my name is Tim Webb. I'm with PowerCorp.us. My question is about I'm attacking shadow banking globally, and you'll find that a lot of people are getting scammed or high interest rates or whatever because they're not going through traditional banking. And so I was interested with some of you with your business models and your experience in international markets. Do you just keep, like you talked about your underwriting and your alternate data, do you just keep that proprietary for yourself, or do you work with other partners that can partner with you? Same thing with Peso, with your company in terms of working with outsiders. And then the last question, which applies to probably everybody, was about I didn't hear you guys maybe address what your plans are with blockchain related to what you're doing in your markets. Thank you.
Ready?
So to address the first part of the question around, do we keep our algorithms and underwriting proprietary? The short answer is yes, we do. That is our IP. That is what our company is built on, which will allow us, to continue furthering our mission of financial inclusion. Now, that doesn't mean we aren't open to certain partnerships if it's the right one in the future. But yes, to date, our approach has been to keep our algorithms proprietary so that we can be the one serving our customers. And regarding blockchain, at least as far as I'm aware of, we don't have any immediate plans to leverage it.
So I can talk a little bit about our company too at ePesos. We have one product that we're underwriting directly with an algorithm, but we have other products that we're using, external sources, right? So for affordable payroll advance, that's a very, very low risk product because the source of the data is the employee payroll database of the company that you're working with, right? So we don't do a B2C. I won't just go to a random employee with a Google AdWord and say, hey, I can help you, right? We go to the company first. And so we're getting that data, right? So our underwriting in that product is really more on how solid is this company? Is this company going to collapse tomorrow? We have a product where we do work with the credit bureau. I think credit scores are dead, especially in developing markets. But if the information is there and you can get it, you can at least see how useless it is, right? So it's cool to have that inflow of information, even if it doesn't really accurately predict whether or not somebody's going to repay a $15 loan. So it kind of depends, right? There's a lot of different services. There are even fintech B2Bs that serve other fintechs focused specifically on underwriting. So if you want to start a lending fintech, but you don't have the know-how that Tala does, you could pay a third party and they'll come build it for you. Right?
I was just going to say we're just focused on alternative asset-based lending. So it's a little bit than just a consumer, but I was just curious because you guys do have experience in the marketplace. Yeah. So, yeah.
Got it. Anybody else want to piggyback there? No. Okay, great. Let's see, I had a couple of really interesting ones. One of my favorite questions is, what is one of your biggest challenges right now to doing what it is that you get up to do every day? Nobody wants to do the challenge question.
You have to look at one and then stare at us. I know. No, so I'll start. I would say, the space that we operated with all these, I think in the US is 26, 27 unicorns now. And, you could say these are just overhyped fintechs, or not. But there is a lot of very smart people in this industry, in the fintech industry. They're looking at things way different than I would say, the classic players do. They come from a different background. They solve things quicker. And I think for us, and I think it applies totally to banks too. We do it on our own, or are we going to partner as hell and make sure that we are tied with one of these, and if we have to, we're going to buy them, and we're going to just absorb the skill sets that they have. For us, I think it's, and that's why we have 2 accelerator programs. Find the right partners, understand what they do. If we cannot do it on our own, then we just buy. I mean, we buy AI companies left and right now. Because we just don't have the expertise inside, and we just buy it. And I think some of the colleagues here would agree to that. It's just, how do you stay competitive with all these guys while certain things that you thought never change, and settlement and all these other things get changed, and then how do you acquire that expertise in-house, or you just hopefully have enough cash to buy people?
So my biggest challenge is bringing a systematic, data-driven approach to the venture investing process. So it's challenging because a lot of the data is squishy, or you don't have the data. Really, it's very qualitative. So figuring out, okay, how can we make this more systematic and bring more transparency to the process is what I think about a lot, because ultimately that's what the big institutions want. And it's not easy, right? So the question for me is, how do I get institutions that are oftentimes inherently conservative, because they've already got the assets, how do I get them comfortable with this very, what used to be a very speculative asset class, and put things in terms that they can understand? So how do we educate both sides to get them comfortable with each other? How do we help the founders speak the language of the institutions? and how do we help the institutions really understand the opportunity now, and how do we frame it in such a way that it really is more data-driven, and where we can apply risk management tools that we've been using on the institutional side for many years. How can we apply that to the VC process so it's less opaque and more transparent, and everybody can feel more comfortable with it?
In my world, I would say, of course, there are different challenges for Uber and Uber Eats that we are constantly on. But in my world, I would say, if it's a new user, say, on my platform, right, and they want to order something large, or it looks anomalous. It's very hard, especially with little data, so kind of piggybacking data. Data is key. I know nothing about you. This is the first time you're on my platform. You've never even taken a ride. But something looks off there. I have to predict with the highest precision possible, do I let this transaction go or not? Because on one hand, I might lose a real good customer, and then there's brand value, and then there are hundreds of other options you could go to, and then maybe he or she will never come back. But on the other hand, especially if it's a big transaction or something, I'm taking the risk on it, and at the end of the day, if I don't get paid for it, then I'm that much in a hole. So that's always the trickiest problem.
And the message says, "Oops, something went wrong."
Hopefully
You don't know
not.
that it was Trupti's team that was blocking you, you fraudsters.
I think, if you don't mind, for the remittance itself, the challenge currently, I think it's more and more remittance using the blockchains, which is the price is definitely go down. So, it's really bottom, really bottom, and which is for the company without the blockchain's technology, this is a little bit difficult at the moment, which is like in form, I speak about my country itself, is for us is the blockchain technology is still gray area at the moment by the government. So if you're a remittance company using the blockchains or using the crypto or this kind of thing, they will be say no. That's for sure. But for the remittance company like us, it's because we have to partner with the overseas, with the client. Our client is B2B, so it's another company in overseas, which is like they choose a company which the lowest price, that is the challenge at the moment. Yeah.
I want to add one thing, and you kind of touched upon it. I think we're lucky now because we've got more data than ever before and tools to really crunch through it that we couldn't do without machines. But we're getting a little bit spoiled, I think. And when you're in situations where you don't have the data, that's where you have to apply the real intelligence. And I think that's going to start to differentiate folks going forward, because everybody's going to eventually have access to the same data, right? And we're starting to see more privacy protection when it comes to data. So if anything, we're probably going to have we're going to have more data, but a lot of the data that we want is not going to be as easily accessible. And so now, I'm thinking about, okay, where can I gain an edge when the data isn't there by having the right process in place and the right overarching way of thinking about a problem and solving it. So even if somebody else has the data, they're not going to be able to outperform me because they're getting lazy. They're getting so used to having the machine give them answers that they're actually not getting to the right answer. They have precision, but they actually don't necessarily have accuracy.
I've lived that problem. Yeah. Anything Attila? Challenges?
Yeah, I'd say for us it's probably prioritization. So one of the slides I shared showed that 3 billion people throughout the world don't have formal credit scores. And ultimately, we're trying to serve that population. That is a very large number spread across a very large number of countries. So partially, it's figuring out, if and when do we launch a new country, because it's no small undertaking. And then even beyond short-term credit products, are there other types of financial services that we'd like to potentially offer for our customers? Because as I mentioned, our mission is to increase financial inclusion, so that does not just mean short-term loans. So it's really thinking about the right time to invest in those sorts of things.
Great. Okay, it is time for the last audience question, and I see somebody right here that's just jumping to do it. So if we can.
Quick question from Milasari.
So if you didn't hear it in the back, what are we doing to increase customer experience and retention?
To improve the customer experience and increase the customer retention.
Okay, improve customer experience, increase customer retention.
You're talking for the customer behavior of the country, or or for the outside of the country? Because what my customer is two type of customer, which is like for the B2B is for the outside of the country, which is like another company is my customer, right?
Yes.
But for, I think in general, what I would like to answer is more the way how to we increase the attention of the customer, of course, with convenience. Okay, so the faster, like Alex as well, faster, secure, and as well, basically, it's convenient. This is very important. And then for to keep the customer, to increase the customer satisfaction, correct, your question? Of course, again, the customer is always wanting the lowest price, right? So that's what we always trying to develop a solution, how to get our cost is much lower, because we, in the remittance business, don't forget, we take risk with the exchange, money exchange, right? So we have to hedge, for sure. That is to increase the customer satisfaction. We give as much as the access, definitely for be it bankable or non-bankable. For non-bankable, for example, for the inbound customer, they can withdraw the money in the institutional, for in the cooperative or in the shop like 7-Eleven shop. You know that we work together. So the more access for the customer to withdraw the money. Okay, that's the satisfaction, because they want the convenient, they want the faster, they want the security for sure. That's what we do. Yeah.
Well, thank you all. This has been a really fun morning. I'm glad that we could get this group of people together to give you the different aspects of challenges of financial inclusion and using fintech to make better, faster, cheaper financial services and products for all.